Hello, everybody. Weekly check-in back again. I have some topics. I actually have one topic I didn't list on there, but I have some topics I want to get through. I don't think it'll take too long because some of these are just stupid nonsense, but I still want to get as many of them covered in one video that I can. So I have to do separate videos. So at the top of this business, people have been asking, and I want to just summarize why it is that somebody like Jerome Powell can literally kill the business with just going up there and talking. And I want to make sure people understand how this all works in sentiment and the whole buy the rumor, sell the news, and all these terms you've heard, but most importantly, sentiment. I believe sentiment is the key of why we see the level of disruption that we often see from cryptocurrency whenever somebody says a thing. So when we do this, right, we're going as traders, we see that something's happening and we want to do whatever it is and we want to try to, make some profits. We feel like there's an opportunity. We want to make some money, right? And we come off 2021, some of us, and then others are new and they see that we're just in red. It seems like it never stops and we don't understand why. I want to just level set one thing here. When Jerome Powell talks, it is because he's coming from the angle of fiat, as in banking, traditional currency, not from an overall economic outlook perspective, etc. So if you accept what I'm saying, which is that he doesn't care, frankly, about what you feel in doing it to this degree of, okay, I've got this whole other side economy, cryptocurrency, that I must think about. He doesn't care. He really doesn't. So if you grant that, then you have to understand one thing. His words are designed to make fiat good, not the broader economy. And so he knows that whatever he says is going to cause whatever disruption there may be. I've got Ethereum up here. I want to just remind people that are a little bit freaked, because you should be a little bit concerned, certainly. But just to remind people, this based at about $980 per coin. So you're still up if you invested in Ethereum when it based. Even if you invested when it got to like 1,200, you're still up. If you invested when you're at 1,900, you're slightly concerned, but I wouldn't argue at this point that it's a significant concern, because as you can see, the graph is still, we can see that there's certainly pressure to buy back up and people are buying dips. It's not that it's, there's obviously the testing of the bottom, and that's going to cause some uncertainty. We saw that, we know this, that's going to be a thing. There's nothing we can do about it. I'm simply saying that if you bought at the base, you're still up. If you had sold when it got to 1980 or whatever that was, you made some good money and you made a dash and you're out, and maybe you're waiting to get back down. Or if you bought in at 1900, you're down a bit, but we see that there's the desire to get it back up, because the whole buy the rumor, sell the news comes into play with the merge that's forthcoming or expected to be. And to their credit, pretty much every exchange has been hyping that merge. They've been hyping it like crazy, saying it's coming. Now, the downside is that pretty much all of them are telling people to short, basically gamble against what's going to happen with the merge, because most people believe that either the merge is going to be one of the greatest things to happen to Ethereum to level set for the next level, the next stage, or it's going to be a catastrophic failure. And nobody really has a definitive. My theory, we've had delays in progress in this business. My theory is at the last minute, there may be another delay, but we're getting pretty close to where they haven't announced anything and they're pretty confident it's going. And they've actively told the exchanges to get ready, in the exchanges like Kucoin hammers you with the business, but they tell you to essentially gamble against it. In summary, I think we're actually in a good spot, go up, because it's an opportunity for people to buy in that couldn't buy in before. That's what I see all across these core coins is an opportunity to buy in where you couldn't have before, an opportunity to level set a low position so that when there is a run, whenever that happens, you'll be able to profit or buy more of the gas at a steep discount, which is what I actually did. I bought a significant bag for buying into a couple of tokens that I had my eye on. And then, of course, I'm DCAing dollar cost average onto Everrise because I believe Everrise is one of those breakout stars that people don't. It's like it's diamond in the rough. It's just out there ready for some major something because people just don't know about it yet. That's what it feels like. They don't seem to fail. Like even when they had a hack, it was so muted. It's like, okay, you just lost your rewards, but you didn't lose your core. And then the distributions they're doing, the dropping of, the contingency wallets and everything else that it feels like they're positioned for success, breakout success at some point in the future. I think, and then they're not, at least not at a wide scale. They're not on the central exchanges, which means it's not subject to the pump and dump. It's not, there's some DCINs that let you do shorting and all that, but they're not subject to the extreme, arbitrage bot stuff. And it seems like it's just a well-built freaking project. And so I have DCA'd into Everrise multiple times now because I see, first of all, they were affected by a bear, but it doesn't like completely crap. It just goes down. And then I buy a little bit more because I'm like, cool. And I was able to double my position, arguably at a fraction of the cost. So in what I have now, I couldn't have fathomed at my basis, the dollar amount I have in there. I couldn't have fathomed to own that many tokens at the price I've got. Well, then I see its growth when it starts going on a run, and I'm talking a minor run. I'm not even talking a major bull run. And it just goes nuts. Like it's amazing levels of profit on this. Now mine, half of it is locked in the NFT staking for about the next 3 months because I figured that'd be the time for us to get back into the true bull run. And then I've got a stash that's in my local wallet. I actually have Everrise on all chains except, I have a Ethereum one. Yeah, I have Everrise on all the chains for compound essentially benefit. And so now it's like, okay, geez, I could just DC into all of these, build this major bag that just sits there and waits kindly and happily for a bull. Because if it gets back to its peak, that's a freaking lot of money. And so I'm like, all right, let me do that. And the disclosure, the fair disclosure here is the money I'm DCAing into Everrise is the money that I would have put in on Libero if they weren't screwing up. And it would have been a lot, but Libero jacks up, which is going to be a topic I'm going to talk about later. So now my mentality is shifted because of this Jerome Powell business. And he goes up and he says a thing and then things, crap and fall just because he says a thing. And it's ultimately because at the end of the day, he cares about the fiat side. He cares about the dollars and the money and the larger economy, transactions that occur using fiat and how, like debt, right? The value of the money that we need to use to pay back debt and the value, how far your money goes in order to do transactions, because he knows that at a big picture, if our money doesn't go that far, it creates problems in getting money back, right, from taxes. So if people don't buy and sell at a regular level or they're nervous to do so, so I'll give you a great example, real world example I just got through dealing with, right? So I bought my PC that I built. I bought all the components and everything else. It cost me about $1,200 off scratch to do the whole thing, shot shebang, $1,200. If I were to, my gaming PC that I bought off shelf back in 2018, $900. And it was a fraction of what this guy could do. Part of that's because NVIDIA prices have come down. The price I got for the card I have, that card is one of the top end cards of the time. And I got it for a fraction of what its true price is. And then processors, because of the semiconductor crisis, this is all causing price, down. People aren't buying. Well, they have to get rid of the supply. They can't sit on supply because there's new of the supply. So now it's a different mind shift, right? Of getting to where you're just buying the last generation and you're saving crazy amounts of money. That's what I'm doing. But what that means is I'm not putting as much money back into the economy as they might want me to do. There was a time when I would have bought the newest console possible, maybe not day one, but I certainly would have aggressively bought the newest gaming console possible simply so I could make sure I could play every game that I would ever care to play. I'm certainly not doing that. I'm not doing Xbox One X because the games suck. I might want a PS5, but I'm not going to right now. I have to wait for Sony to say, well, your invite's good to go and come on this one day and we'll reserve one for you. And screw that. It needs to be that I could go to a GameStop or I could go to a Best Buy freely. It's stacked up on the shelf and I can easily buy it and not have to any stress. I don't have to worry about dates. I don't have to, we're not there yet. So, and they're blaming the semiconductor. I don't blame the semiconductor because everything else has supply. What's really happening is scalpers. The scalpers know this. And so they're taking money out of the economy because they're profiting significantly off of scarcity, artificial, I argue, scarcity. This that Powell's trying to do is get back to a world where people are willing to spend without being concerned about it. That's what he's trying to do. And so the things he's talking about and the things he's calling out as far as these rate changes, trying to bring down inflation are designed to get to a point where, look, we've got to get everything stable. We got to get everything back on the level that we had before. When he made his announcement, this happened out in Wyoming, when he made his announcement, almost immediately we saw craps all across the board. I want to show you one of them, which is Bitcoin, which is now beneath the 20,000 mark. This freaked out a couple people because Bitcoin's bottom resistance was expected to be roughly that 21,000, 20,000 line. And if it went too far beneath it, that we could end up going down. And if you look at the graph, we do indeed see that there's a little bit of down happening here after this business. Now, Bitcoin is a bit of an aberration because there's multiple things in play with it. There's obviously the buy sell, just general sell pressure that's still there. There's the lack of strong institutional. We did see a couple like BlackRock buy in, but we're not seeing enough of it buying back in, which lends to confidence. I would argue that many people are just waiting for the right price. And I would argue many people don't see the bottom. Others that did analysis on YouTube speculated that the bottom was already hit and that we were on a bull run. If you heard my last video, I said I wasn't sold and I believed that we weren't yet done. I felt like we were going a little bit, but I didn't feel like the end. And that was mostly what I look at was the volume numbers. I was looking at, well, really what's the volume of transactional activities? I went to Kucoin because I have, bots and things that went on Kucoin and I watch my bag there. And what I see is there's a lot of shorting. So basically people are gambling. There's a lot of it across the board. It's not just Bitcoin. It's Ethereum, Luna Classic. It's all across the board. People are basically they're shorting this stuff. They're essentially gambling off of whether it goes up or it goes down, or they're taking loans off the thing and kind of draining it. So like anybody right now that was lending out their Bitcoin, the value of it's going lower. Anybody that borrowed Bitcoin in the expectation of getting profit is going to get wrecked. And it's going to be liquidations. That's more sell. There's all this that's happening. And I do firmly think that while Powell's might have triggered it, started the fire, I think there's more under the hood that still had yet to be fleshed out. In other words, I think that we still haven't got to the point where people are trying to get away from basically squeezing all the life out of it. They're trying to get as much and get out quick. I don't think we're past that yet. And the graph seems to correlate to the idea that we could be going a little bit further down. How much further down? I don't know. Because I do think that part of this is people waiting for the right price. I'll tell you in full disclosure, I'm hopefully signing another deal with my side Endeavor. I'm telling you right now, I'm telling everybody here right now, I'm on the air, public. If this second deal signs next month, yes, I'll be watching the Bitcoin price and I'll be buying some Bitcoin because I do believe at some point it's going to hit to a law of diminishing returns where more of the dump won't make any sense. And then it's going to start jumping because it'll hit that price where people will buy major bags of it because they still think that it has profit potential. And then once it starts going on the run, FOMO will do the rest of it. I believe this. And I might be naive, but I believe this. So the thing is, Powell cares about inflation and the impact on the industry. The real thing causing all this nonsense is that we have tied cryptocurrency trading to essentially the stock market and tied it to fiat, and we have created this risk. It's not him, the person. It is the connection to fiat that has caused what we see. We are causing that disruption. Crypto was never intended to be traded that way. We forced it that way. If you notice, most of the new cryptocurrencies that are coming out, they want to try to rush towards getting on centralized exchanges fresh out of the gate, which was never the right answer. I'm not saying don't get on centralized exchanges. I'm saying that getting on it fresh out of the gate might actually be to your detriment, because what you're doing is you're tempting arbitrage, you're tempting pump and dump, you're tempting all these things because you want to get as much exposure. The truth is the people that are there are just waiting in the wings to gut your project. If you didn't care, great. But then people who are in the decent side, who were there from day one, let's say, see these disappointments and they don't know what the heck's going on. I would argue Satam is in a similar situation. Although there are multiple failures, especially the failed November 13th event, played a strong factor in it. I also think that their approach, they waited a long time to get on central exchanges and then ultimately went on an aggressive push to go on centralized exchanges, which I think might have made it worse. By which I'm saying, if they had started in with a strategy of not trying to do wallets and not trying to be the next exchange and not try to do that and just get on a couple exchanges to increase awareness of it while you work on the perfect trading tool that you have strong QA on, I think they would have gone to the moon, do. They did a different path, and so they struggled. And they continue to struggle because they're tied to Ethereum, and Ethereum is tied to Bitcoin, which is tied to this business. Where do we go from here across the board? I still believe that we will hit some strong run up at some point when I think people are waiting for the right price to buy in. And if you're waiting for the right price to buy in and you've already determined what that price is, good on you. We saw Ethereum based at 980. We're seeing it trending downward ever slightly, but we also see that there's some buy pressure. Now we have to see if that buy pressure wins out over the sell pressure. But for Bitcoin, I am of the opinion, and it's just my opinion, that Bitcoin is in a bad state and it's going to have a hard time getting back up to levels that we saw before or even earlier this year. Hopefully we do, but I'm not seeing it today. So we'll see where we go. I want to revisit that whole trading bots situation. If you don't know what a trading bot is doing nothing more than automating what you would normally do when you're trying to trade cryptocurrency on a centralized exchange. There's multiple strategies that they have. Ultimately, you're either, depending on what you're trying to do, dollar cost average. Dollar cost average is a fancy term for I want to spend $1,000 on this cryptocurrency, period. So what is it going to take for me to spend $1,000 on the cryptocurrency? It means that if it goes where my total bag is now worth $800, I need to buy $200 more of the cryptocurrency, which means I'll end up with more crypto. If it goes above 1,000, I need to sell for profits and put that back in the wallet and so on, so that I never go beneath this 1,000 mark. I might DCA to the point where I simply just stack bags, which actually I'm doing with Luna Classic. I'm DCAing it to the point that it just stacks bags. Everrise too. Just stacks bags, add bag, keep on crapping. I'm just keep adding bag and it is what it is. So that might be why I might say, I'm just going to let it stack my bags for me because I want more of the cryptocurrency when it dips. With Everrise, when it dipped and when it crapped out, I actually was able to double my bag, which is awesome because I can see the profit potential. So the bot automates what I would normally do manually as, okay, when it goes down, I need to buy more. When it goes up, I need to sell for profits. It automates that transaction. There are also other types of bots. There are arbitrage bots. Arbitrage bots are trying to profit off the difference in price for volatility reasons. So if a volatility triggers that's going up and down and up and down and up and down, and you are trying to profit from this up and down, that's arbitrage, the bot will do that automatically for you. And watch it. Luna Classic has probably right now the greatest amount, other than Bitcoin, the greatest amount of arbitrage bots floating out there trying to profit off what's going on with Luna Classic, because Luna Classic has extreme volatility because of the whales that are using pump and dump strategies against it. And then all the buy the rumor, sell the news around Terra Rebels, which I'm going to get to here momentarily. So now you spin up all these bots and bots and bots and bots, right? Everybody's doing bots. When you go in then to the exchange, you'll see that there's like buys and they're the same amounts, like 200,000 or 2 million. It's always the same. There's like 4 of them, or sells. Those are bots that are doing it. You can do a bot if you're on a centralized exchange, not Coinbase, but other exchanges. You can do bots too. And that may help you with your strategy of, I just want to get more bag, or I want to take profits off arbitrage, or I want to do whatever I'm trying to do. You can use bots to do that. That is available to you. There's nothing saying you cannot do. It's up to you if you choose to do it. The risk is you could lose a lot of money, because in certain cases, the volatility is either so bad or just continually craps that you could actually lose a lot of money. Now, these are unrealized losses. So if you don't sell, you just let the thing run to duration, you wouldn't have an actual realized loss, but you would get possibly, if you're one of those that gets nervous every time you see red, it's probably not for you, because the bots tend to lose more than they gain unless you get in at the right time. Like if you have a token that just launched, fresh launch, and you want to try to benefit off of its volatility, it's going to have more arbitrage opportunities for profit than any other that's already established. So like just recently, Dogecoin launched, and people know about it at a high level, but it's not at that point of saturation. So nobody's really strong FOMO'd into it yet. So the opportunity to arbitrage off of it is strong. My bot had like 400 arbitrage opportunities that it took off this business. So I just let it run and see how it goes, because why not? It's not the kind of coin that I would, or token that I would keep long-term or use as a strong investment. Its sole purpose is really profit. And then the airdrop that they allegedly are going to do for Dogecoin holders, I haven't seen one, but I was just going to watch it and see what the heck it does. So if you get into the bots, understand, you'll have to have a strategy going in. What is my strategy? What am I trying to do? Am I trying to DCA? Am I trying to profit? What am I trying to do as the reason why I'm considering the bot? Don't just go off the FOMO that the exchange will do, because like Kucoin will absolutely FOMO you. No, do this bot and share 100,000 pool. Don't fall for the trap. Make sure that if you're going to do a bot, you do it for the right reason, which is, I'm trying to stack my bag in DCA. I'm trying to arbitrage profit. I'm trying to watch a portfolio of different tokens, whatever. And I just want to automate the tasks I would manually do. Great. Just don't fall into the temptation that many of them will do. And I do think that looking into it, at least the bots might be actually pretty cool. However, consider what I also said. Don't leave your currency in exchanges. So if you're going to do it with currency you literally don't care about losing, because as we've seen with many of these exchanges, they are absolutely happy to lock your stuff out and keep you from it. So make sure you're okay losing it, because that's a risk when you go into the bot world, that money is gone and never going to be recouped. There's a temptation, for greed-driven temptation, of just leaving thousands in the thing. And if you have thousands throwaway money, great. I know I don't. So I'm not going to leave thousands in the bad boy. I'll leave, a couple $100 that I don't really care about. Just watch it and see what it does, and let it generate some side profit and be cool with that. But I'm not going to give it thousands and thousands of dollars. Absolutely not. I refuse. Then let's talk about this whole business of the so-called, as they call it, student loan, quote, bailout that was just signed by the president out here in the United States. For those that are coming from international shores, the way this works is that, and I'm going to give you a little history lesson, because I actually worked in the business. In the past, what would happen is, distant past, you're talking 60s and the 70s, you could work a minimum wage job and make enough to buy a house, take care of your household family, keep food, and send somebody to college. All of this on the minimum wage, because the cost of doing the education wasn't anywhere near what it is now. We've gotten to the point now, fast forward, the cost of going to college is extremely high. There are different theories about why that is, but ultimately it is extremely high. What the solution was to create loans. And the loans are brokered by taxpayer money. So taxpayer money pays into the system, and then you can then take loans back out of it. So they created what I argue, I'll straight say it. Social Security is another great example of this situation. In effect, it's a Ponzi. In effect, here's what I mean. As students they take these loans out. You are then, when you go into repayment, you're charged interest on the loans. The interest then goes back to the government. And that interest is then used to broker new loans, as well as the Pell Grant and other sources of this financial aid. The thought was it's more important to get more people through college. That was the thought back at a time when hardly few people went through college. There was an aggressive push to get more people to go through college. This is coming off the tail end of the various wars that we went through. When employers were trying to find good people, there was a time when all you really needed was the desire to work. And the motivation to work was you needed to feed your family and pay your bills. At the end of the day, that was what it was. So you just needed to show up, period. There wasn't this nonsense application process. There wasn't, you just need to show up, walk into whatever, steel yard or the rail yard or whatever and say, I'm ready. Let's, whatever we got to do. You would be partnered with people who would then train you and they would mentor you on what you need to do the work correctly and with quality. And so then you get used to it and whatever. One of my ancestors, distant uncle, distant great, I believe it's great uncle, worked the rail yard and he died because he got squeezed between the trains, which was a risk. And it happened to a lot of people. Either they would get ill because of the work they would do, they would get damaged, they would get crippled, something would happen as part of this. So there was this thought, well, we're changing the nature and the level of knowledge necessary to do other higher skilled work. So you're talking now when airplanes and airlines start to be a thing, and you're talking when computers start to be a thing, and more technology comes into play, more science comes into play, more engineering, medical is advancing. The thought was we need to have more educated people. And there was an aggressive push largely between the 80s and the 90s to get more people to college. So the employers at one point changed to where, okay, we just need a high school diploma. We can train the rest like we used to. Then it was make sure you get an associate's degree and then we can train the rest. Then it was, okay, we require a bachelor's degree and we're not going to train you because we assume the college is going to train people. So then what is the effect of this? More people take these student loans because the cost of college goes up because there's more students. More students means more teachers, means more curriculum, means more buildings, and later more software. They have higher costs. Cost of doing it, giving the education goes up. As a result, they need more money. People can't pay it. They no longer can pay it out of pocket. So now you're from certain colleges being a couple of $100 to a couple $1,000 are now in the 5 figures or sometimes 6 figures. Well, then the real pressure on this happens at the highest levels because you have doctors and whatnot that have 6-figure loan debt. And these people might not get a job that pays them enough back to pay the loans. You cannot discharge federal student loans in a bankruptcy. You must pay them. If you don't pay them, not only is there collections, but it also limits your ability to get more loans. So you have a lot of students then who are saddled with great debt because they chose this job path where they were told by the media, nope, being a doctor, you make a 200,000 doot, and they get in and they only make 100,000. Well, wait a minute. And then you have to pay for homes, which have skyrocketed in price. Inflation affected food. I'm sure people remember when gum was 10 cents at the store. We're not there anymore. All of these things stacked. So the cost of things went up. Salaries went up somewhat. They didn't go up the same rate as the cost of things. The loans are still needed because the cost of going to school increased, and because your salary didn't go up, you have to shore it up with the loans. You have to shore it up with the Pell Grants. You have no choice in most cases, unless you have a low-level degree, which none of the employers really want. Then the other effect was liberal arts. Liberal arts is nothing more than, I don't know what I want to do for a living, but I'm going to go through and learn things about culture and things about history and high-level stuff that's designed to position me to figure out what I want to do. But the employers don't want liberal arts degrees. They want primarily STEM-based degrees. That's what they want, and they want you to have it fresh in the door, and they don't want to train you. Okay, so now you got these other schools that spin up, and they say, you know, that's not sustainable. Some people don't want to learn STEM. Some people want to learn something else like arts or something that's generic. And so you get these like generic schools, whatever that, Corinthian colleges, the Art Institute, some of these other ones, ITT Tech. You've seen the ads if you're in the US. I'm sure you've seen that commercial at least once. These spin up and they create alternatives, and they take these loans in order to do them. But then the school closes because they're not educating students right. Their pass-fail rates garbage. Something happens where the school shuts down. So now the student is still saddled with the loan, right? Now you get people fast forward. Biden releases this business that says, you know what? When I campaigned, I said I was going to cancel student loan debt for you. And this is the start of me doing that. I'm going to cancel essentially $10,000 worth of student loan debt. There's a process. It's called borrower defense. And there's a list of schools where it's automatic and a list of others where it's evaluated. And sometimes you have to apply and there's loan limits. I'm not going to talk about the actual program. I simply wanted to preface what got us to this point of even thinking of waiving these loans. It is, well, sometimes it wasn't their fault why the school shut down or the debt load is too great and we're trying to do something to help people out. It sounds good. However, people on social media made the comment that all you're doing here is you're shifting the burden to the taxpayers because ultimately this has to be paid for. Because as I said, those loans have interest that's expected to be paid. And if you went to a garbage school, sorry, it is like I went to a garbage school and it had some loans, but I didn't, it's whatever. I didn't need to have it waived. I went to the school. I went to 3 colleges. All 3 had loans. It is what it is. I picked the wrong school. Sorry. But a friend said something interesting with the pandemic benefits that we were doing, with the so-called stimulus checks that we were distributing. He said that anytime we're giving people money back, whether it's this where we're canceling debt, whether it's something else where we're sending checks directly, that some people might just simply put it back into cryptocurrency because it's money that's not out of pocket, essentially. Well, that got me thinking. Some people are going to take this and let's say it was a one-off loan and they're not going to put any money towards it. Maybe they were saving to make payments when it goes into repayment. Now they're not going to do it. And they might buy like tickets to some game or might buy some, furniture or some TV or something. Some might buy it for some garbage reason, but some might actually put it in cryptocurrency. That's a thought. Well, think about it. If we start seeing that bull run, and I do believe that there's other nefarious reasons behind this, but if we start seeing that bull run, it'll be interesting to know what percentage of those people are actually sending their money that they got from this business back into cryptocurrency and helping the bull run by doing it. Well, we saw with the Jerome Powell that you're going to lose value anytime they come out and say something because they care about the fiat side. So if this happens and it turns into something, I think it's exciting. I think it's exciting to watch, but it also might be concerning because if your bag is one where you have significant risk, so I'm talking risky cryptocurrencies, you're going to still see more volatility as people, quote, pump and dump. If a lot of them buy into cryptocurrency, those, again, people use the word JEET and people use the word KEK and all the, the kids, because, Biden gave me my stimmy, so I'm going to go dump it into this crypto. It's going to take, let's go, do. And then they dump and then your assets impacted. That's what my point is. That's why I only focus on the assets that are trying to act serious and act like a business as opposed to the garbage tokens. Because my concern is, yes, we could get an influx. This is my summary, an influx of those kinds of toxic people that got us to this point in 2022 in the first place, where at one point we were on this good run. And now we're seeing this significant disruption that I think partially is to blame. These kids that are coming in the business, do I want their money? Yes, because many of them are outside the bubble. So yes, I want their money. But I'm concerned that they're coming in for the wrong reasons. And it's going to affect our own bags. And that's what I don't want to see. The other piece, which I'll quick note, we have to see, because this was all a stunt. This was all a stunt to appeal prior to the expected blowout in November and gain some voters to say, well, look, Biden did what he said he was going to do. He didn't do what he said he was going to do. He did something. And this something was based on an older law. So it is progress. But unfortunately, there's been so much damage, arguably, in 2021. And then these, the FBI raid and all the stuff, I think sentiment has been harmed to a degree where you've unfortunately fired up a certain segment that's going to go out there and force, and they're going to do whatever they can to get these other people, not him, get these other people out of office to take power away from him. Because if you take over Congress, he basically becomes a lame duck president. Okay, he's then lame duck until 2024, and then we see what the heck happens. Well, I don't think that's good for our economy. But I do think it's good to get away from bad policies that affect our economy. So we'll have to see how that all plays out. My last note that I'll talk about is rebase tokens. Or actually, you know what? Before I talk about rebase tokens, because I think it's relevant, something bad happened with Terra Rebels. Terra Rebels is the whole Luna Classic business. First of all, their whole Discord got completely trashed. It's gone. So they lost all their channels. They lost all their chats. And if you didn't know, Discord does not let you automatically back stuff up. You have to use a bot. The problem is, to let the bot do its job, you have to give bot admin rights. And doing so is risky, because then the bot could go rogue and trash your channel anyway. So you're kind of screwed. But you're expected to do things like create a template and hold the channels and have monitoring and do these things. And they were attacked, I believe, this is my theory, I have no evidence, I believe they were attacked because of the fiasco that was going back and forth on their Discord with one of their members. So a complaint was filed at a local police station around Terra Rebels. Now, I don't want to bore you with the details of this. The summary is there was a guy who was asked to KYC for some reason. I didn't see the detail because Discord's terrible to see history of a thing, but apparently he was asked to provide KYC of a thing. And after the KYC, he apparently thought or believed or whatever that his identity had been stolen. Well, it seemed like this guy didn't understand what the KYC is. In the Discord, we have a bot and it's doing the KYC and it collects the documents from you. You're not required to do it. And I've purposely never done it because I get concerned when a technology is trying to collect my information. I have the same problem with ID.me, which a lot of these government agencies are doing. I refuse to do it because they don't need it. They think they do, but they don't. So this guy, he apparently willingly submitted his stuff and then went back and complained over it. And I don't know why, because it's like he willingly did it. You can't, it's an optional thing. You don't have to do it. So this then spawned all sorts of weird stuff that's going on with this business where some other person is making these allegations that people are trying to build a DAO around Terra Rebels. And as part of the DAO, you'd have to put people in charge. But the initial vision of the Terra Rebels was it was going to be a community initiative and community controlled and driven, and the community voted. Well, with a DAO, it is community vote, but somebody has to administer the DAO. It's the same thing as with Terra Luna, TFL, is that oversight above the business that makes sure that the DAO votes are implemented. So for whatever reason, this person then makes these allegations that, I see you're trying to do this and create this structure up here. This is not what we agreed to. And I'm concerned, and we're going to have some problems if we do this. And I've got some evidence that some of these people coming in are not going to be for the best interest of whatever. It went on, and they were providing all these statements that didn't make any sense to me personally. And what I learned later is that this person was purposely being vague because apparently they were part of, in some way, the legal team around this Terra Rebels business. And so they would provide responses anytime, like this lawsuit that I just covered, or the civil complaint. Anytime those come in or some lawsuit, they would basically field it and provide some advisory service. And so this person is well known in the community. All of that now is gone. That whole feedback is gone. So I'm going to summarize what this person eventually had said at this time, because I didn't expect that the entire Discord would be deleted when this all happened. And I figure it's a more serious issue than it seemed to be. It's apparently a female. She responded and said, I reviewed what this person said with this civil complaint. I understand what they're saying. There's nothing to it because it's willingly. They chose to do this and they were informed of what it is. And if they have a concern, probably you shouldn't put your data out there in the first place. If you're concerned, it's an optional something, whatever. She did some digging then later separately to try to understand what was the root of this change with this DAO and this organizational structure. And she was asked to provide some advisory on what that structure would look like. And she was given a list of names. And one of the names she didn't disclose, but she said one of the names gave her some concern because that person had openly admitted somewhere else that they didn't care about the community and ultimately were just trying to profit for themselves, and that they would pretty much be the second coming of TFL, which would, of course, kill Lunk, which is in a fragile state right now. So she's expressing, I was asked to provide advisory on this new structure, but this structure is not the DCEN we talked about. There should not be this structure. If you're going to do the DAO, it should not be it's decentralized autonomous org. You can't have this oversight above it, because then it's the same thing as what you did over TFL, and that creates a risk on Luna Classic. And so she's expressing it, but she's not being specific. She's not calling out names. She's not saying the who's or the what's. She's saying, I saw these concerns. I don't agree with it. So that I'm not in your way, I'm going to basically back out of the project. This then starts this absolute crazy firestorm of freak out, because unfortunately the Terra Rebels has created hopium in the community. And there's a lot of those kids who use the word jeet and kek, you probably saw it on the screenshot, in the community because of the hopium. There's this hopium of, man, this love's going to make me a millionaire. And so when she says this, and she's very reasonable, she's very logical, she's very level, she's just saying, I was asked to provide my assessment. I provided my assessment. I wasn't listened to. I'm concerned for the future of this project because it's not what we talked about. So I'm not in your way. I'm just going to get out. I'm going to get out. Instantly, she's getting beat up and attacked for this statement, and it's not going anywhere. So it's back and forth and back and forth. So then all of that's gone. The Discord's gone. The whole back and forth's gone, and nobody really knows what the resolution is. The summary finding I had, once I was able to get to it, was apparently the Terra Rebels, somebody's trying to put some structure over top of it. Somebody's trying to put some oversight over the DAO governance, that other people are concerned of the people who would be oversight, that they would tank Lunk, or that they would basically drain off the project even further and not work in the best interests of the investors. I can't say 100% that it is or isn't or will or won't. I can't prove a thing because, number one, all the Discord history is gone, so I can't do further analysis. All I can tell you is that this person, who is part of their legal representation, expressed these concerns about the future of the Luna Classic revival under Terra Rebels. Where it goes, this creates great risk because Luna Classic, as I said, is very fragile right now. Here's my theory. There was chatter that Do Rugpul, aka Do Kwon, was trying to get back involved in some of the decision and some of the work to revive Luna Classic. And he recently sent out a tweet somewhere or wherever else that said, yeah, I think this Luna Classic can get back to $1. My theory is he's one of the people involved. My theory is he's the person that this legal person was reacting to, of his involvement in the project because of what he did on Luna, what is now Luna Shiny, what he did to Luna Classic before, and that person, Do Rugpul, might be trying to get involved to enrich himself, basically, essentially a glorified Ponzi. So I have no proof of this, but I find the timing of his announcement and the timing of this legal person's announcement to be very interesting myself. I wish I could provide you more data. Somebody was pretty smart in deleting all of that back and forth from the Discord channel, so I unfortunately cannot do. I don't have any information. The restored channel's back, but they didn't do a template, or they haven't restored from the template, and they're not going to get the chats back in any case. So it's all wiped. It's all gone. All I have is the evidence of the complaint that spawned at least some of this nonsense, and then evidence of the chatter of the person that talked about, hey, there's some stuff here that's going to be some problem. That's all I know. And if that sounds shady as hell, it's why I said on YouTube with this, when I did coverage, I said, manage your hopium, because it's not that it's impossible to get Lunk restored. It's highly improbable. And it's because I suspected garbage like this was going to get in the way, because that's how crypto works. We cannot seem to do things right for the life of us, because greed gets in the way. Now, rebase token is my last topic. Every rebase token, all of them, Alto, Seifu, Titano, Libra, all of them are crapping. I want to summarize why they're all crapping, because they're all crapping for the same reasons. And it actually doesn't have to do with the rebase mechanic. It has to do with how they do the rebase mechanic. There are two ways to do rebase mechanics. There's positive rebasing, and then there's the traditional rebase. Traditional rebase freaks people out because what it does is it literally adjusts your wallet essentially a form of DCA. So you buy in at $100, and for that $100, it's worth 1,000,000 tokens. If the value of what 1,000,000 tokens is goes down, it's supposed to give you more tokens to get you back to your 100. If it goes up, it's supposed to go down to get you back to 100. It's essentially an artificial form of DCA, but it's literally adjusting what's in your wallet. That's traditional rebasing. All of these projects to a T spawned off Titano. We're doing the positive rebase, which is essentially like a reflection in the sense that it would always, as the price of a thing goes up, it would simply rebase and add and rebase and add and rebase and add. Here's the flaw. In order to rebase and add, regardless of why you do it, you have to have the supply. These all launched with a heavily constrained supply, all of them, which gave them the unsustainable APY that they used to market to you of 500,000%, etc. In order to do that, they had to constrain the supply up front. But what they did is they said, we can still mint because you have to for the rebase. So in their rewards, the rebase rewards, they would just print money, print money, print money, print money, with the expectation that the volume would continually increase and the expectation that the value would increase over time. Well, what happens in a bear market? In a bear market, your volume may or may not increase. It depends. Or you might have the wrong type of volume, which is sell volume. Your value is going down though. So your value of a thing is going down, but you're getting more of a worthless asset. You're getting more of a worthless asset, you're getting more of a worthless asset until it gets to the point where your basis is actually being harmed. Anybody in Libero who's in Libero Bank as an example, if you locked in the bank, I guarantee you what's in there is a fraction of what you've totally put in that business. And that's why, is because the value of what's in there has been harmed because of the excess printing, which continues because there's still a rebase mechanic. Dropping the APY didn't do any good because there's still that amount that's out there. Because it's locked in the bank, they cannot get rid of what's locked in the bank. And there are people who continually get more, and they lock more and get more and lock more. Here's the irony. Since all of them are doing the same mechanics of the excessive printing and then the locking mechanisms, it's not resolving the problem. Instead, they'll spin up another shiny. All of them are doing that. All of them are doing that. They'll spin up another shiny because they're trying to get away from this problem by doing something else that they think will get away from the problem when it won't. My summary is that the rebase mechanic, it's not about rebase itself. It's the way that all these projects, the Seifus of the world, the Titanos of the world, the Altos of the world, Stacked, which crapped, the Liberos of the world, it's the way they're doing rebase as positive only, as opposed to the true rebasing. If they had done the true rebasing, you might have actually had a better experience, but they chose not to do that because then they couldn't do this amazing APY that was unsustainable that they used for marketing. Their marketing was always the flaw because their marketing was based on a theory that we were going to maintain a bull run based on what we saw in 2021. And then the theory that we would recover that bull run based on the sentiment changes and everything else that we saw. None of that was going to be true based on what we now know, which is that we still got a ways to go down. We haven't hit the true bottom, and we still have to hit that true bottom before any of it matters. Well, let's assume that they're able to get to some point of solvency because of the decisions they made, which are faulty decisions. Sentiment is harmed. And once you lose sentiment from your investors, you will find it hard to recover, as Floki had to learn after 2 rug pulls. Floki is actually a solid project now, but look how long it took before it was able to get to that base of confidence. It took too long. You've harmed investor sentiment. It's hardly ever going to recover. This that I'm showing you here is Seifu. Anybody who was in the Seifu ecosystem remembers this one peaked at $330 a token. If you compare where it was and where it is, it's because of the decisions made and the way that it was launched and the way that everything was done. The rebuttal, and this is every one of them. I'm not just targeting Seifu. All of them do it. The rebuttal is, well, you're still getting rebase rewards. And I want to stress, if you're just getting more of a worthless asset, right? You're just getting more of a worthless asset. What good is it for you? Because you're just getting more of a worthless asset. If you stay in them, cool. because you're banking on the probability that it's going to get back to success at some point in a future state. There's nothing wrong with that strategy. I'm never, have never, will never tell you it's not good or right or any of that. I'm saying I might not because of whatever. I'm saying that it's faulty to say that you're up because you cannot, because of the way the rebase was implemented. The rebase was implemented for a bull market. So you're basically getting more of a worthless asset. If you had a bank account right now and your bank just said, I'm just going to pay you 5 cents every day. Yes, it's 5 cents more every day than you had before. But if all your bills add up to about $1,000 every 2 weeks, that 5 cents ain't going to go very far. And at some point, you're going to run out of money if you don't do a side job or something else because that bank, interest isn't going to do you much good. That's what we have. The amount that they're paying in interest isn't good enough based on the value of what's in there. And because your value is not going up, your level of interest isn't going up either. So they spin up new shinies. And what type of shiny seems to vary? Say if he wants to do this, allegedly do a blockchain, which I don't think is going to move the needle because they already have saturation in holders. Libero wants to do these miners, which I believe at some point is going to be insolvent and run out of money, in my opinion. Titano, I don't know what the heck they're doing. That's just whatever. The shiny isn't ever going to be the answer. I don't believe it'll ever solve a thing. And I think they're just reacting to what they see and kind of treading water, waiting for getting out of the bear. We don't know how long it's going to take. And time will tell if it's a smart strategy. Meanwhile, I'm still focused on the gas tokens, the core coins that have blockchains directly now, that are established, that have good volume, whether I arbitrage them or I store gas off of them or whatever, and then solid mainstays like your Everrises of the world. Those are the ones that have my focus right now because I can't justify, you made a bad decision at a point when you designed it, didn't listen to people trying to tell you that it's a bad decision. Here we are. Those that are loyal to those, I celebrate that loyalty because I respect it. I do. And like I said, with Libero even, there's one guy or lady, whatever, and geez, he's got like 5,000. They've got like 5,000 in Libero Bank, just Libero Bank, and they keep adding to the bank. They keep going into Libero Bank. I celebrate that level of loyalty. I do, because it's hard to find it in cryptocurrency. And if it wasn't a 4-year lock, I might do it myself. If it was like Everrise, where I could lock and unlock at my will and only take like a 10% or 20% penalty, I would do it. But a 90% penalty? No, I refuse. Because we don't know how long this is going to last. We don't know how long we're going to be in a bear market, and I refuse because I can't, frankly, trust the devs with my money anymore. I refuse to lock my money that much. And the same is for all of these. Like I had mine Alto Protocol. I refuse to give them money because, again, right now, it's not the right answer. They're good people, but it's not the right answer for me right now. With that, I'm done with my topics. I got through everything in record time. So I will pause to see if anybody has any questions, comments, feedback. Feel free to leave them in the chat. I'll check Twitch's chat, hopefully. Because I believe we got another follower on Twitch, and I welcome you, and I thank you for that. I still say Twitch is amazingly awesome, by the way. But yes, if you have any questions or comments, please leave them in the chat, and I will respond. Otherwise, if you hear this after the fact, feel free to leave it in the comment section below, and I will get you a response. We've already had a couple people take advantage of that as well. Cool business. Like I said, if you think of something after the fact, leave it in the comments. I will respond on those. I respond on all of them. Mind you that the comments are filtered because of the post chain spammers mostly. There's other ones, but the post chain spammers. So they are filtered. So it may take a little bit for your comment to appear, but I read each and every one of them and I will get you a response. And in closing, I think right now we are seeing some disruption, truly disruption. spearheaded by the Jerome Powell announcement, but also other sentiment things are playing into factor. But I see from Ethereum that there's still that desire to buy dips. And I think if everybody can hold the line in whatever you choose to invest in, because I'm not telling you what to invest in, I'm saying whatever you choose to invest in, if you choose to hold the line on whatever that is, I think that you're going to be in a good spot coming out of this spot. I think we're going to recover. I think we're going to get back to a bull. As I always say, I just can't tell you when, because I still maintain where everybody pretty much is waiting for November to see if we're going to shift people out that shouldn't be in it anymore and hopefully get back to some level of stability. Thank you for listening, whether live or after the fact. We will be back again next weekend for another stream, same bat time, same bat channel. And again, mind you, I still say these core tokens, I still believe can simply never, ever steer you wrong. I will never stop believing this, especially in the bear market, because they seem to always prove me right. And I love them for it, despite the fact that I think Vittle is still an idiot. See ya.